On today's Animal Spirits, Ben and I talk about Josh Brown's new incredible book. You weren't supposed to see that.
All right, we look through the current year-to-date returns and wonder if this is as good as it gets for financial markets and investors.
This guy, Ben, accused me mid-show of doing something wrong when, in fact, I didn't do anything wrong. I stand by that.
I still demand an apology, which I never got.
You're not getting it.
I give my list of best high school movies of all time. Long list. And give the best high school movie there is.
An $820,000 Bronco? What are you, out of your mind? Stick around. My brain broke. Today's Animal Spirits is brought to you by our friends at YCharts. I use this thing all the time. If you are looking over my shoulder at my computer screen, which admittedly looks a bit like my dishwasher, Ben, does it not?
I almost had a heart attack when I saw your computer screen when I was in New York a couple weeks ago. Just tabs and files and
chaos.
Folders, as far as the eye can see.
That's how I roll. One thing that you would see, a constant, the opposite of chaos, very neat in fact, is my YCharts. My dashboard, I forgot these stocks, that stocks, this macro indicators, these target date funds. No, I don't follow target date funds like Ben does. I've got it all. Economic data, whatever I need. It's customizable. And there's all sorts of other stuff that you could do. Model portfolios, client communication. What else, Ben?
They have their own blog, too, where they publish their stuff that you maybe couldn't find. Same thing with me. The first thing I check in the morning is email, then YCharts. And I go to my daily... I can never think of the name.
Your daily... What, your dashboard?
Dashboard.
Hey.
There we go. Getting old. So yeah, you can check out the YCharts blog. They have all this good stuff here where they create content for you. Subscribe to the blog. It's pretty easy. Link in our show notes. And if you want to get a YCharts subscription, you don't have one yet, mention Animal Spirits, get 20% off that initial sign up.
Welcome to Animal Spirits with Michael and Ben. It is a great day. It is the first day of school for my children. I've got a fantasy draft tonight. I'm going to see Pearl Jam tomorrow. We've got football on Thursday. We are so
Pearl Jam guy. I wouldn't have taken you for Pearl Jam guy.
It's 60 degrees outside. It is crisp. The seasons are seasoning. I love it. This is my favorite time of the year. The kids are back to my routine. My wife is out of the house. She's back at school. I had a great summer with her. Love my wife, but I'm ready to be back to normal. Pearl Jam guy. You know, they're not my favorite band, but I mean, come on. They're legendary. They're legendary artists, and they come to my town. I got to go see them.
And Eddie Vedder drinks a bottle of red wine for every show.
Okay. Listen, I mean, who doesn't like Pearl Jam?
Yeah, I love Pearl Jam.
Okay.
That's a lot of 90s nostalgia for me.
All right. Speaking of nostalgia, and another reason why it's a great time of the year, you weren't supposed to see that. My partner, Josh Brown, wrote an incredible book. And Josh really... all the accolades and all the praise, it's well-deserved. He really is a one-of-one GOAT. The format of this book is something that I think he alone could have pulled off. What he did was he took 20-something of his most infamous blog posts and repurposed them, and then wrote Josh's remarks as a follow-up to what he was thinking when he wrote the book, what's changed or what stayed exactly the same. And I said, speaking of nostalgia, because for me, this was a trip down memory lane. I read every single one of these posts as soon as they were published. For some of them, I was in the building, as Mikey Francesa would say. I was in the building when he wrote them, literally in his office. We shared, Josh and I, back in the day from, 2013 to 2018, actually. I do know. We shared... Ben, how big would you say that office was? 8 by 8?
It was pretty. You could barely fit two desks in there.
We were touching toes. So anyway, the book was incredible. I've known Josh for a long time. But there are things in here that I didn't know about. And he definitely peeled back the curtain. And just an incredible book. Fun, insightful, smart, all that good stuff. I blazed through it. It's a very quick read, as Josh's style is. And I just can't wait for everybody else to read it, because it was really, really an incredible book. And what was the last book I read? Kyla's book, maybe? I I might be back, Ben. I've been thinking
reading?
about jumping back in. I was inspired. I got the feelings of, you know what? Man, I like reading. And it's been a long time, but maybe this will kickstart a renaissance,
It's hard to find the
book
time.
renaissance. It is.
Josh's was one of the first investing blogs that I started reading that I would read religiously. And I came across it from someone else had linked to it. And I thought, oh, what is this? When I was first getting into the blogosphere, 2011, maybe 2012. And then he was the first one where I would go check every day because I knew he was going to be writing something. And back when finance Twitter really took off, I would say 2013 is like for me, that's my nostalgic period for finance Twitter. It was really humming. And you would have a blog post that would come out and it would just go nuts and everyone would be tweeting about it. And Josh had so many. He is like the all-time leader in those of screen grab, highlight the sentence. Here's what Josh, he had the most of those. And yes, going back through reading some of those, the optimism as the default setting is still, I think, my all-time favorite one of Josh's, but there's so many.
So many. And I think Josh's ability to connect invisible dots where nobody else could see them, he's got a gift. So I love the book, and I'm happy for Josh. I'm proud of him. Really, 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 really excellent.
Yeah, and he like taught me how to find your own voice when writing. That's what people always ask, like, how do I start a blog and stuff? The thing is, like, writing in a way that you talk or that shows your own personality. Josh was the one who did, oh, okay, you can actually write like yourself. You don't have to sound like this robot when you're writing.
If you were to just read one paragraph plucked from Josh's blog, you know it's him. No doubt.
Yes, exactly. It stands out. So yeah, go get Josh's book. It's great. All right. As good as it gets. Okay, movie. I like this.
Jack Nicholson.
Title's probably better than the movie.
Is it Helen Hunt? Who's his love interest?
Yeah, Helen Hunt.
I like that movie.
In it. It was okay. There was a dog in it. Okay. This is as of the close on Friday. I pulled this chart from YCharts. These are year-to-date returns, total returns. S&P 500 up 19%, NASDAQ 100 up 17%, Russell 2000 up 10%, Bitcoin up 40%, gold up 21%, international stocks, that's the IFA, up 12%, emerging markets up 9%. The ag is up more than 3% this year, and you're getting 5% T-bill yields. Is this as good as it can get for investors? This is pretty darn good.
It's about it, yeah.
That is not bad. And the reason that I like to do this kind of stuff when things are going well is just because you know it's not always going to last.
Oh, it's coming.
I don't know what it's coming means, but
you know what it means. I mean, things don't stay this good forever. I'm not predicting anything, but it's not always this good. That's a fact. It's not a prediction. Yes. It's a fact.
It's a good reminder, I think, just to lay it out that way. And
maybe to check yourself.
I do think the funny thing about bull markets is like the whole bad news is a headline and good news is progress or goes unnoticed. But this year doesn't, as good as it's been, it still doesn't feel like euphoric or everyone in the boat, or you don't get that feeling of this is a like 2021 and 2020 was so nuts. We don't get that feeling this year.
You know why? I think we've had it so good for so long. This is a long bull market, man. I know that there's been periods of give back. Obviously, 2020 was devastating. 2022 wasn't fun either. But take those two out, and it's been up 29%, up 46%, up 15%. It's been so long.
We are working on a 15-year bull market, and people say, well, this bear market resets it or that bear market, but the 1981 or 1980 to 1999 or whatever, that 2-decade-long bull market, there was setbacks along the way. There was a 1987 crash and times where people probably went, oh, geez, this is it. It's over. But we're living through one of those now.
But what do you think about my hypothesis? Do you put credence in that it's just we're used to the good times?
Yes. I think people become numb to it almost, where you lose appreciation for it.
Well, and then the other
it's kind of like a long marriage. You don't appreciate your spouse as much anymore, like you should.
I do. I love my spouse, wife.
Okay.
The other thing is that
you should, with the way you load a dishwasher, you should appreciate that she puts up with that.
Excuse me. She should appreciate that she doesn't have to touch a thing in the kitchen. I cook, I clean, I load, I unload. She should be thankful, despite my dishwashing loading habits. The other thing is that the good times that we've been talking about are not equal, right? A lot of it has been disproportionately mega cap tech stocks. So I think that's a big component of it as well. But the rally's broadening out. So there you go.
Right. Okay. from Gunjohn at the Wall Street Journal. Americans are really, really bullish on stocks, and it's like a bull with a crazy eye. So here's from this article. U.S. household stock allocations have steadily inched up this year, according to J.P. Morgan estimates, and recently accounted for around 42% of their total financial assets. That's the most on record going back to 1952. And it dropped to below 20% in the 2008 crash, now up to over 40%, which still seems low to me. And the way that I look at this, are people getting more bullish or are they just better informed? Because it seems like the allocations to equities were way too low in the past.
What about both and neither? Like,
Okay.
I think that the main thing driving this is auto enrollment into 401ks.
Yes, I agree. And
And
more
also
knowledge.
target date funds. Like
Yes.
that's driving the ship. I think it says more about that than how Americans feel about the stock market.
Yes.
But why wouldn't they be bullish? It's been a 15-year bear market. People are getting the memo.
This from the article, this made me laugh. This is a quote. Was just going through my 401k and holy hell, what a godsend, wrote Steve Etheridge on social media platform X this month. Yeah, if you look at your accounts now, especially after what they were in 2022, you should be giving yourself a holy hell because, again, things are going pretty well. But I agree. How many people in their 401k are thinking, I am super bullish on the stock market right now, so I'm going to turn the dial up? A handful of people might do that, but
I think most people don't think about the stock market.
No, I think to your point, it's just, yes. And if we showed those returns from earlier and asked regular people on the street, what is the stock market doing? Could they guess anywhere near what it actually is? Probably not.
No.
Okay, from Bloomberg, new territory. The S&P 500 is up 25% in the past 12 months and has never climbed this much in the run-up to a first interest rate cut of an easing cycle. The 7 decades of data compiled by Ned Research and Bloomberg show.
Ned Davis.
What did I say?
Ned Research.
Okay.
Ned's a great name. You don't see many Neds anymore.
That is true. What's Ned short for?
Nedwin? No, I don't know. What is Ned short for?
Is it just Edward and people say Ned as a nickname?
Was it Ned Schneebly in School of Rock or was it Ted?
I think it was Ned. Yeah, you're right. Yeah, not a lot more Neds these days. So I think you were talking about this with Josh last week, just of the historical comparisons of the Fed and the markets, and just I think throw all of them out.
Throw them out. There's nothing there.
This is all right. Back to the bullish stuff. This is from Axios via Fidelity, via.
How do they get this data from Fidelity? They call somebody? I want this data.
I think Fidelity released. I don't know how they have the history, but they go back to the last 5 years. Record number of 401k millionaires at Fidelity, almost 500,000, just at Fidelity alone, which is one of the biggest. I think the biggest retirement plan administrator in the country. But is that a lot or a little? Seems like a lot to me.
Seems like a lot.
Just 401k, because most people have 401k and an IRA and brokerage accounts and another 401k from an old job, and so just the amount of people who have that, to me, being 500,000 people, that seems like a lot. Just at Fidelity.
Are you consolidated? I bet you are.
No, not as much as I should. Well, I'm relatively consolidated. Probably not as much as I should be. I like when I left my job to come to Ritholtz, I rolled my 401k over. My wife still has a 403b from her old job that's just sitting there in index funds, and I probably should roll it over and put it all in one place, but I haven't done it yet.
I think I had, I think my 401k when I was at Mass Mutual had $2.97 in it. What should I do with that?
That seems like an AI assistant kind of thing. Hey, AI assistant, roll my 401k over for me. But it is because they most places literally send you a physical check.
Pain in the ass. There's a company, Capitalize, that's tackling that project.
Making it easier?
Yeah.
Yes. Okay. So I don't know. Is this, maybe this podcast so far is a good contrarian indicator?
On what?
Everything being so good and bullish?
Yeah, I said it's not always this way.
All right. The New York Post had a piece on the ex-Peloton CEO, which I don't know if he was the founder, if he was just the CEO.
Was he in founder mode?
Yeah. I didn't read it. Is that okay?
Founder mode? We'll talk about it later.
Okay. I'm an open book, he says, as a brief stint as a billionaire. At one point I had a lot of money on paper. Not actually in the bank, unfortunately. I've lost all my money. I had to sell almost everything in my life, which makes for a good headline. Like, oh, former CEO was a billionaire. Now he's selling everything.
Imagine they tax his unrealized gains. Can you imagine?
That's true. But they also say he spends his summer weekends in the Hamptons, where he recently downsized twice, including selling a $55 million waterfront home. So that he had to sell everything, but I think he's still doing okay. I don't know how levered he was, but he probably did. They talk about how he's starting a new company, and I'm sure he'll be fine. But this part got to me. He's running some new company. I can't remember what it does. It's like an interior design or something. He has no interest in taking a company public again. This is funny. Peloton shares went from $170 to $2. With that type of delta, I don't trust the public markets to get pricing right. He says Peloton is a $40 or $50 company from my perspective today. The current price is like sub $5. He says the contract of the public markets getting a valuation right is broken. So he's blaming the public markets for Peloton. No missteps on his part.
Nope.
Just the public markets are wrong. Peloton should have been $1 trillion company. Remember he said that?
Did he?
He made some comment that Peloton could be $1 trillion company someday. I think which was funny. The whole thing about him saying public markets are wrong and I don't trust them anymore, which is saying that, like, guess what? Eventually those marks work their way into private markets. You can't fake it until you make it forever. Did you read the Eugene Fama piece in the FT?
I did.
Okay. I thought it was very good. And his whole thing, I always get really annoyed when people go, "Oh, markets are efficient, huh? Perfectly efficient," when something goes wrong.
That's a pet peeve.
It's very annoying.
Efficient markets.
He says that, like, it's all models are wrong, some are useful. He says that's the same thing. And he said he actually wishes that he wouldn't have used the word efficient because that's the thing that really drives people nuts. And he says, the question is whether it is efficient for your purpose. And for almost every investor I know, the answer to that is yes. They're not going to be able to beat the market, so they might as well behave as if prices are right. And his whole thing, he says, if prices are obviously wrong, then you should be rich. And that's the thing that made me laugh about the Peloton guy. That if Peloton really was a $40 or $50 stock and it's trading at $5, he should put everything he has in.
Good. Guess what? Round up a couple $1 billion, take this thing private, and then boom, easy peasy. The quote that stood out to me was, Robin Wigglesworth wrote the article. He had lunch with Gene Fama in Chicago. He said, some of the backlash against the efficient market hypothesis may simply be down to hangups around the word efficient, which Fama admits he can understand. And here's Gene Fama. I just couldn't think of a better word. It's basically saying that prices are right. And guess what? Prices basically are right. And with the benefit of hindsight, of course, they're always changing, so they're always wrong, but they're right enough. And sometimes they're ridiculously wrong. But for the most part, the basic premise is you can't consistently know if prices are right or wrong. And therefore, the markets as a whole are generally efficient. And I think that's fair. And I understand why people quibble with it, because there are all sorts of behaviors inside the market that would lead you to say, efficient? What is efficient about this? This is crazy town. But by and large, it's tough to know whether prices are right or wrong.
How many people have been screaming about the U.S. stock market being overvalued for, I don't know, 12 of the 15 years of this bull market?
Tons. So Professor Plum, Mike Green, was tweeting about this, and we heard in the past, I think Charlie Ellis might have said this, that Vanguard is only or indexes are only responsible for 5% of total trading. And that number just didn't seem right. Like, I know we've used it in the past. I just don't believe it at all. I don't see how it could be possible given how the size of them. So Mike Green tweeted something. He said,
right, because if money goes in, you still have to buy those stocks in.
Now the argument is, well, how many buyers does it really take to set fair prices? But that's sort of moving the goalpost, because somebody tweeted to Mike Green, what is the percentage of trading volume that is passive? And Mike Green said Vanguard tries to lie about that as well. So he shows the composition of trading has changed. From 1995, 80% of it was active management. He calculates that's down to 10%. And passive direct trading, and honestly, I don't know the difference between these two, but passive direct trading is 20%, and then passive market making is 36%. And then passive index derivatives are another 8%. So you put that together, and that's about 2/3 of the market trading. And I don't know if that's right or wrong, but it seems directionally more right than 5%. That number sounds totally made up.
Yeah, this looks high to me, though. Because of all the trading that hedge funds and HFTs and algorithms do, that this seems.
But do we agree that the 5% number? There's just no way.
It's
And if
also
somebody
true
from Vanguard wants to present the data, I'd love to see it. That number just sounds completely wrong.
Okay. I guess I've never seen that before. The one that I always saw from Ellis was in the 1950s, 95% of trading was done by households, 5% by institutions. So this kind of thing is literally always changing.
Yeah.
It's not like there's always been this one way of doing things and all of a sudden it's different now. It changes over time.
Yeah.
Okay. Interesting nonetheless. Let's go down to the economy. All right, this is from Vanilla Options. I feel like upper middle class wages growing the slowest since 2019 explains the vast majority of the economic discourse on here, meaning Twitter. And it's showing that these are real wage growth, 2019 to 2023, is up the highest for low wage people, the bottom 10%, 13%. This is real after inflation, right? And so all
real
wages...
as in it's not made up? Where do you get this data?
Yeah, the government says it's real. But it does show that, so this is high wages is 4.4%, low to middle wage. So the bottom 40% has seen the highest real wage growth. And the upper middle, which is the 60th to 80%, has seen the slowest wage growth.
No, Ben, the lowest wage growth has seen the biggest change.
Yeah. No, I said the upper middle has seen the slowest wage growth.
Okay, I'm sorry.
Yes. So that's saying, I think we talked about this a couple weeks ago, that it's kind of the extremes that seem to have done okay, in the middle or upper middle has been a little left behind in this cycle, and that's part of the reason that there's so much angst.
Yeah,
and you say it's like small business owners paying more for stuff and paying more for wages.
And like white collar middle management, I totally buy that.
But these are I can never tell if I'm using this word right, but you always talk about the people who are doing more well off gaslighting the people on the lower end, saying you're the ones getting screwed. And they've been saying that, and it's usually that is the case when inflation happens, but it hasn't been the case this time.
Right.
Yeah, so I kind of actually believe this. Okay, from Morgan Stanley via Daily Chart Book, which is another one of my daily things I do. U.S. consumers' net worth has grown at 8.5% year over year, on average each quarter over the past 3 years, 200 basis points stronger than the 3 years before COVID. So every quarter, we're growing at an average of about 9% a year in household wealth for the past 3 years.
Damn.
That's pretty good.
I'd say.
Another thing that won't last, but about as good as it gets.
Ben, we've been talking about demographics, finances, millennials, boomers, and the Wall Street Journal did a big expose. Did I use that right?
Hang on. I gotta tell a story here.
Go ahead.
My wife sometimes will get into doing something and she's got her blinders on. And I say something to her, my kids say something to her, and she doesn't hear it. And then 5 minutes later, she says something very similar. And do you hear what I literally just said this. Sometimes this is you with me.
In my defense, and I apologize for what I just did there, but in my defense, I forgot to put something in the doc.
Okay.
So I put it in the doc, so I had to turn my brain off for 10 seconds. So I apologize. Hand up. Did you say the word expose? Did you incept that into my brain?
No. I literally talked about this story 2 weeks ago on this show. This is interesting from the Wall Street Journal. This is the lead for their piece here. Millennials are now wealthier than previous generations were at that age. They can't believe it either. And it does the thing where they interview millennials.
Okay.
But if there's something interesting you want to pull out of here, but we did this.
We did this already? All right,
yeah.
Fine. Well, here's another thing that we did already. Listen, I was there. So by the way, I disapologize. What I thought I just did wrong, I didn't do wrong. I was listening, half listening.
But you weren't listening 2 weeks ago on the show. We literally went through this and the charts.
Okay, well, we're not going to do it again. Listen, we do a lot of shows around here.
In your defense, we do.
I can't retain everything. All right, fine. So let's skip this one and let's talk about another thing that we already did 2 months ago. Actually, not 2 months ago. We did this one in May. Remember this?
Okay.
The greatest wealth transfer in history is here?
Yep.
Okay. So this is from Tal Smith, and we had Tal on TCAF a few weeks ago. I know we did this. I just want to repeat it because it's astounding. They showed the annual wealth projected to be inherited by each generation, and millennials are going to inherit so much money. 68% of millennials and Gen Zers have received or expect to receive an inheritance of nearly $320,000 on average. I was about to say, I know that there are people in my town and in every town that are just waiting.
Oh, yes.
That are doing okay. They're getting by. And I don't think that they want their parents to pass away, but
that's their retirement plan, right?
But it's an inevitability.
Yes.
And
The question is, when do you get the money? Because for most people, it would be much more helpful to them in their 30s or 40s, but they might not get it until they're in their 60s. And at that point, it's how much help does it really? Like, I have a friend from high school who would always joke that his father was a surgeon, that my retirement plan is my parents dying. And it was
he says it out loud.
Oh, yeah. I mean,
All right, credit to him.
yes, very tongue in cheek, but also like there was a level of seriousness to it.
But so listen, it is what it is. But it's definitely going to continue the inequality stuff.
Yes, I agree. And the funny thing is that on the one hand, baby boomers will be living longer because health and medical, all this stuff is getting better.
But there's
on the other
so
hand,
much money coming. And it's kind of weird because this has never happened before. There's
Yes,
never been a massive wealth transfer. Our parents didn't have any money.
But we've shown the stats before about people not spending down their retirement dollars. The people who have the most, their money has longer to compound now, too. So it's going to be even bigger inheritances than people have gotten in the past.
Yeah. Part of the all cash buying that we can't figure out is there's definitely some of this in here. I don't know how much of it is in the data, but it's.
Yes. And we got some feedback on that we'll get to later. But I totally agree that and especially the down payment help and all this stuff is coming a lot from.
Speaking of gaslighting, you just tried to gaslight me into apologizing for not listening. I won't apologize. I was multitasking.
Okay. I still think you owe me an apology, but we'll agree to disagree.
Listen, I told you my brain is not what it used to be.
It happens. We're middle-aged guys now. You're finally accepting it.
So, no, I'm not. Americans, from the Wall Street Journal, Americans' economic mood brightens a bit. This is from August 31st. Did we do this last week as well?
Did not do this yet.
Okay, just checking. The American consumer is starting to shake out of a lingering bad mood. When the Wall Street Journal asked 1,500 voters in late August for their feelings about the economy, 34 said it was improving, up from 26% in early July. The share who thought the economy was worsening fell to 48% from 54%. I spoke about this on TCAF last week. For the first time in a while, I noticed the price of gas in a good way.
It does. I was thinking that too. It seems like it's lower.
Because it is. Look at this average price of regular gasoline. Down from a peak of $5, it's now down to below $3.50 nationally. And I noticed it. And I got to say, I felt pretty good. I don't know if that's psychic income or what, but it was a shot in the arm.
So I've seen a few people post in the last couple of weeks about the personal savings rate being back down into a lowest level it's been in a long time, like sub 3%. And a lot of people say, well, this just proves the consumer is tapped out. And I think it proves almost the opposite, that consumer finances are so good, people think, I don't need to save as much anymore, right? My house is way up. My 401k is way up. I'm earning 5%. Don't you think that's part of it, that this is not the way people should think and react?
It's somewhere in the middle, right? But I would more lean towards your interpretation of this, that people are feeling pretty damn good. They don't need to save.
Right. And that's not how they should act. You should keep saving. Keep it constant. Don't get up and down and just because things are good now that you slow down the saving. But I think that's how a lot of people do think and act.
Well, we're a nation of spenders. We spoke about it last week. We speak about it a lot. Sheil Minot tweeted, I kept getting Instagram ads for a classic Ford Bronco. Looked interesting. I clicked and used their cool configurator. I was completely astounded by what this thing costs. Are people paying this much? Must be for the company to exist and invest in creating the configurator, ? All right, so an old Bronco, but new, I guess.
Okay.
$820,000?
No way. People are paying almost $1 million. No way. For a Ford Bronco? I don't believe this.
So car dealership guy, he quote tweeted car dealership guy who said, monetizing nostalgia is an incredible business. I've recorded with someone today who's doing it in the car industry. He's running a multi-million-dollar business selling modern classic vehicles.
Okay, so I just looked up classic Ford Broncos for sale. There's like 1970 Ford Broncos for sale for like $240,000. Wow. How much do you think it cost at the time? $5,000?
No, less.
Less than that? Probably. Okay.
Wild, right?
Yes.
Remember last week I said that I bought a chicken shredder?
Mm-hmm.
I don't know. I guess I'll use it like 3 more times. By the way, somebody tweet this to us. This the why won't this damn drawer open starter pack.
Yes.
You got a ladle. You got a what is that? What is that thing called on the right? A grater?
Yeah, cheese grater.
Cheese grater.
The masher. Yes. The ladle is the worst one.
The ladle is the worst. What? Yeah, get rid of ladles. So Robin sent me on Instagram. She's being targeted. There's a grape slicer. You pop a grape in, you click it, boom, four cut up grapes.
Grapes are so small anyway. Why do you need to slice a grape?
So the kids don't choke.
Oh, my kids just eat them whole.
Anyway, $5.99. We got to get that in our drawer.
Okay.
We buy everything. Okay. Switching gears. Somebody tweeted, Peter Berezin tweeted, quote, learn to code. Remember that? That was like the thing, learn to code.
Say everything.
And then he tweeted, he showed a picture from Fred, software development job postings on Indeed in the United States. This is one hell of a wild chart. When it looks like arc, all the way up, all the way down.
Do we think that this was just a bubble in tech stuff, or like tech over hiring, or
I think it's
AI?
I think it's the AI thing.
Okay. You don't think a lot of this was so many jobs posted in the United States were never going to be filled anyway? That
I don't know. Yeah, I'm sure it's both. Did you listen to Gavin Baker with Patrick?
I did not yet.
Okay.
What's a TLDR?
I can't TLDR that. It was a lot in there. But some of the stuff that they were saying about like humanoid robots coming, like I think things are going to look a lot different in the next, I don't know, in the future. In the near future.
We're going to need it. We need people to take care of aging baby boomers, right? Because let's be honest, millennials are way too selfish to do it. We need home care nurses that are robots. We're all going to need, people are going to want robot nannies. Like this kind of stuff is, I can see people totally using this stuff and trusting it immediately.
I think there was a scene in iRobot that was like an old lady with a robot.
Yeah.
We're
going to need it.
It's coming.
70 million baby boomers in their 70s, 80s, and 90s. We're going to need it.
Jason Furman wrote an article, an op-ed in the Journal about taxing the rich, like the unrealized gains things. Did you read this?
I did not. I saw his tweet thread about it. I just think it's funny how up in arms people get about taxes for the ultra wealthy. This one seems to have taken on a life of its own. It's just funny to me that people care so much about taxing. We're talking about like 3,000 people.
I think that the people that care, it's not about the 3,000 people. It's about like the slippery slope of overreaching. And yeah, it starts with the ultra wealthy, but then it trickles down to everybody. And I think it's a fair concern.
The funny thing is, if you look at tax rates over time, they go one way, down.
Down. Yeah. So he said, he laid out 3 reasons why we should do it.
He's pro.
Yeah.
Okay, I didn't know that.
He said, and him and Tyler Cowen were going at it respectfully. I thought it was a good back and forth. Waiting to tax until gains are realized through the sale of an asset has 3 major disadvantages. First, linking taxation to realization encourages people to hold on to assets. That's true. These gains escape taxation at death, which turbocharges the incentive not to sell and prevents capital from flowing freely to those who can make the best use of it. Reasonable. Second, taxing gains when they are realized is unfair because it allows 2 people with similar income or wealth to be taxed at different rates for arbitrary reasons. For example, if you hold stocks that appreciate, they will be taxed less than similar stocks that do not appreciate but do pay a dividend. I don't know.
How about this?
It's a big issue.
How about this? When the way that the easy way to do this is if you borrow against your stock, that's a taxable event. That's like taking a gain.
Yeah.
That'd be the easiest solution.
Yes, I agree with that.
That should be a taxable event. If you're borrowing against it, you're effectively taking money off the table that's a taxable event.
Yeah. That jives. Finally, taxing only realized gains narrows the tax base and requires higher federal tax rates and more kinds of taxes to meet revenue goals. It just seems the plan just seems so convoluted and impossible to enforce.
I agree.
And would create all sorts of
it's never going to happen.
All sorts of complexities and headaches, and people will find ways to escape out of this as well. It just seems like I don't know. Just seems like sort of dead on arrival.
Here's who we should be going after: the endowments and foundations. Harvard and Yale, they're hedge funds with a college attached to it. Tax those things. I mean, they already did add some little tax, but keep
And
taxing them until they
religious
spend it more.
organizations,
I'm fine with that.
why are they
them.
tax-free? Tax them.
Right. I agree.
Tax everything. Tax it all.
All right. But listen, if I make $1 billion someday, I'm not going to be happy with this. Okay?
Yeah, it just seems sort of silly.
I might need $1 billion to go to the arcade. So we have a new place in town here that is like a kind of a Dave and Buster's, but has more. It's like a huge video arcade, and they also have a bowling alley, and they have laser tag, and it's all this stuff. You know, you walk in and you feel like you're gonna have a seizure. It's just
Arcades
loud
were
and everything
great
is
back in the day. It's like a casino for children.
Yes, it is. So my kids loved it. They love Dave and Buster's. This new place opened, so we went yesterday. Weather wasn't that great to be outside, so we went in and did some stuff, and we did the laser tag, and we did bowling, and we did arcade. And the arcade thing, you pay some money, and they give you a card, and then you swipe the card, right? And it's effectively a form of crypto, because you get it, and it's like $30 equals 160 credits, and each game costs 5 to 10, whatever it is. Arcade inflation is real, man, because you do this, and I put, I don't know, $30 on each kid's card. So we have 3 kids. So that's $90.
I don't know, man. One credit equals 1 credit.
That's what it should be, right? And it was easier when it was just quarters. So now you don't even know. And the kids are swiping left and right, and they're doing these stupid games where they try to win more tickets, and it never works. But I mean, that $30 for each kid was gone in like 15 minutes. Just swipe, swipe, gone, and it's just gone. And it's like, wait, what? How is this possible?
Yeah,
it went
it's bad.
really fast.
Dave and Buster's, the one near me, closed.
Didn't make it, huh?
Yeah.
So this is like that, but on steroids, and it was a really nice place, and a nice bowling alley, and a brand new bowling, because a lot of bowling, there's very few new bowling alleys. A lot of them are just the old ones that made it. This was a bowling alley, and the pins were on strings. It wasn't a duck pin bowling, but it was like that. So it'd be easier to set up, you know? And I didn't like it, because I need pin action.
Yeah, that's kind of the whole point, like hearing the sound, right? You still get the sound,
so you don't get the you don't get the sound as much.
Okay, yeah, I don't like that.
Anyway, arcade inflation is real.
We haven't deleted a category in a while. I think maybe what was the last category that we deleted? Supply
chain. Yeah.
All right, layoffs gone, deleted.
Oh, this is the top.
That's it.
Your unemployment rates are rising. Really?
That's it.
Okay. Well, I feel like we lump that stuff into the economy anyway, right? I think a lot of those layoffs were the tech stuff that was happening.
Yeah.
All right. We are entering the wait and see economy. I feel like for a lot of things, like the stock market is waiting for some exogenous event or a recession to hit before something really happens, you know? I think the same thing with real estate.
Wait, who are you quoting here? Who called it the wait and see economy?
Oh, I guess I'm calling it that. I'm just looking at, this is from Redfin.
I think you stole it from somebody.
I think Callie Cox on our team was saying that.
Okay. Yes, Callie did.
So pending home sales fell 6.9% during the 4 weeks ending August 25th, the biggest annual decline in nearly a year. That's despite median monthly housing payments falling to its lowest level since February, as mortgage rates dropped to the lowest level in 15 months. And they give a bunch of reasons why they think buyers are waiting. And they say clarity in the NAR settlement, which I don't think anyone really cares about that. Lower home prices, lower mortgage rates, the outcome of the presidential election. Listen, only one thing matters here: lower mortgage rates.
Yeah.
So I think people are thinking, well, I'm going to wait till they get in the 5s before I come off the sideline and buy. And that will make things more affordable. And you and I have talked in the past about trying to time the home market is just a fool's errand. But I think we're in the wait and see phase. And I think it's the same thing with refinancing. People have asked us in the last couple of weeks, when should I refinance? Because if I got in at 7 and now it's 6, should I wait more until it gets to 5.5 or 5? And I think that there's some of that going on here. And I don't know what the level is. I think once we get into 5.5 range, that's probably going to unlock a lot of things. I wouldn't get too cute with it, because you don't know how much of the demand is going to come back too once we hit a certain level.
Yeah, if you find the house that you want, that you could afford, do it. Pull the trigger.
If 50 basis points going to matter in the grand scheme of things to you, if it does, then you probably shouldn't be buying in the first place.
Yes.
But I think we are in kind of this wait and see place. All right, someone asked, we said, why is real estate always the highest performing asset for consumers? Why do they think it is? Good comment on this on YouTube. I think I have a good answer. Much less volatile than stocks, and the volatility is never fully apparent. You only see the price bought and the price sold. You don't see all the maintenance, taxes, HOA, insurance. Good point. Several very well-educated friends are terrified of the stock market. A friend of mine has over $500K in cash. She works for a FANG company, and her only stock exposure outside of her 401k is her company stock. She does not like the ups and downs of the stock market. That makes a lot of sense to me. You don't get the volatility.
Yeah,
and
I buy that.
even though way more people are involved in the stock market now, I'm sure most people would say, I'd rather have a house where it's out of sight, out of mind in terms of the price. You can check on Zillow, but is there really volatility there? I don't think so.
I buy that. We spoke earlier about all cash offers and where's all the cash coming from. Somebody emailed us and said, I have had at least 15 clients buy homes in the last few years. Every single one used their brokerage account as collateral using a line of credit. They appear as cash buyers to the seller. Nobody's using traditional lending products in my experience.
See, if those people had $100 million, it should be a taxable event.
Yeah.
Okay, speaking of this, I got a letter in the mail the other day for our place on the lake. We have 3 clients looking to pay all cash on the lake, up to $1.4 million or $2 million. They are serious and prepared to make all cash offers. They're just saying, like, this is, can you imagine getting to that point where it's like, I'm going to do an all cash 7-figure offer, and I want you to just spray and pray all around this area and tell people, like, just make it happen, even if it's not for sale. Is that a baller move or is that like a desperate move?
Desperate? I don't know. It doesn't sound like a great strategy to me.
I wouldn't think so either.
Do we really think that because I know we said it sort of tongue in cheek, but do we really think that people borrowing against their portfolio, that should be a taxable event? How would that work?
No. I was saying, like, if you have it'd have to be above a certain amount. Right? So if we're doing the $100 million thing.
But this is the hard thing. It's like, where's the line? I mean, that's talk about arbitrary.
Yes, I agree.
And people, but the thing is, but when you draw a line, people just say, okay, I'll just go with the line.
Yes. There are probably way better ways to tax the ultra wealthy. How's that?
But the thing is, the ultra wealthy are really good at hiring professionals to find loopholes.
That's the thing.
These kids, how do you eliminate all that?
If you look at the old tax rates, there was a time period in like the 40s or 50s where the tax rate for people making $1 million a year above was like 90%. People go, see, look, we used to tax the rich.
Yeah, what do they actually pay?
No one actually paid those rates because it was so easy to hide it from the IRS.
Right.
Yeah, but there's got to be simpler ways to tax the wealthy if that's really going to be your platform.
Yeah.
I agree.
Ben, did you see Twitter was lighting up yesterday with founder mode?
I saw the piece from Paul Graham. I guess it took on a life of its own.
So Paul Graham shared a blog post. He said, at a YC event last week, Brian Chesky gave a talk that everyone who was there will remember. The theme of Brian's talk was that the conventional wisdom about how to run larger companies is mistaken. As Airbnb grew, well-meaning people advised him that he had to run the company in a certain way for it to scale. Their advice could be optimistically summarized as hire good people and give them room to do their jobs. He followed this advice and the results were disastrous. So he had to figure out a better way on his own, which he did partly by studying how Steve Jobs ran Apple. So far, it seems to be working. Airbnb's free cash flow margin is now among the best in Silicon Valley. The audience at this event included a lot of the most successful founders we funded, and one after another said that the same thing had happened to them. They'd been giving the same advice about how to run their companies as they grew, but instead of helping their companies, it had damaged them. So Twitter lit up yesterday, and Albert Wenger tweeted, founder mode is a great concept, ... that will also be used to justify horrendous leadership. So founder mode, the thing is like basically like, this is my company. I know the DNA of this. You don't know. Let me make the decisions. And again, it's not black or white. I'm sure there's like a middle ground where people, executives coming in, managers coming in, have completely ruined companies. And it's also true that for every Jeff Bezos, there's a million other bozos who ran a company into the ground.
Yes. And saying I'm going to emulate Steve Jobs is like saying I'm going to emulate Michael Jordan. I'll just do what the best person ever to do this did. And I also think one of the things about founders is they take themselves way too seriously. Like, calm down. Yes, great. You founded an awesome company. Great. But there is a difference between running a startup and running an actual publicly traded company. They're not the same thing. Like, think about Mark Zuckerberg runs Facebook way differently now than he did when it was a startup. He adapted to the changing times.
Yes.
That's the thing.
All right. Do I want to do one thing on Great Quarter? So Dollar General.
Also, this makes me kind of want to sell Airbnb. I feel like admitting this, like, I feel like this guy's probably kind of lost. I mean, I like the company. It kind of makes me want to sell.
So, the stock looks like trash. Where is this?
Yeah, it has not been a great investment for me. I was really bullish on Airbnb and it has not worked out.
Chris and I are staring at an Airbnb the Saturday before Future Proof. It's $250 for the house.
Okay.
There's a $225 cleaning fee. I don't know if that goes to the homeowner. Maybe it does. I don't like seeing that. And then the Airbnb service fee of $67. So one night goes from $251 to $543.
Jeez. How much of that cleaning fee do you think is actually just going to the host as part of the nightly rate? And they're just using it as a way to get people in the door.
I'm sure you could find that. I don't know. I would assume a lot of it. All right. So Dollar General. It says so.
You know the weird thing about Dollar General that I always notice is that they're always in rural areas, right? They're like in the middle of nowhere. You're like, why is there a Dollar General here?
Yes.
Obviously, that's the plan.
So Dollar General is a stock that I have bought and sold twice. Credit to me. Did not take large losses here. The stock is in let's see, I think the deepest drawdown ever. Let's just see. YCharts clickety clack click. Yep. Oh yeah. Ooh. By far, 67%. Almost not nice territory. Really bad. So is this a buying opportunity, or are they just getting destroyed? So this was a kitchen sink type of quarter. You know, sometimes you listen to conference calls and you see the stock market's reaction. You're like, why is it down 12%? I don't get it. So Dollar General is down 27% or whatever after the conference call. Guess what? Completely deserved. If you listen to the conference call, you would say, down, I don't know, 15%, 40%. You couldn't make up a number that would surprise me. That's how bad it was. So they say, from a monthly cadence perspective, same-store sales growth was strongest in June before turning negative in July. Notably, the 3 softest comp sales weeks of the quarter were the last weeks of each of the calendar months. This pattern suggests that our customers are less able to stretch their budgets through the end of the month. With that in mind, as well as our continued softness in discretionary sales in our own customer data and survey work, we believe the softer than anticipated sales performance in Q2 is at least partially attributable to a core customer that is less confident of their financial position. I want to provide some additional context around what we're seeing and hearing from our customers. The majority of them state that they feel worse off financially than they were 6 months ago, as higher prices, softer employment levels, and increased borrowing costs have negatively impacted low-income consumer sentiment. As a result, and here's a coup de grace, our core customer, who contributes approximately 60% of our overall sales, comes predominantly from households earning less than $35,000 annually. Ben, let me ask you a question. At what point in history were people earning $35,000 doing well? There's not a point in history, because by definition, they're always doing poorly.
Sometimes these companies, you look at them as a bellwether of the economy.
Not this
sometimes
time.
It's like, but here's the thing. So Dollar Tree is also off 50%. My question is, what's the trade down from a dollar store?
Okay,
where are these people going that's not the lowest price place that there is?
I could be out of my depth here, but I think Walmart is killing them.
Okay.
I think Walmart has made it really, really easy. And I just think that I think it's more of a Dollar General. I think it's more of a dollar store story than a low-end consumer story.
Right. Walmart is probably a better deal than both of these places. Just because they have dollar in the name doesn't mean that it's the best deal. Then you're getting everything for $1, right? So that makes sense.
People were pointing to this as evidence that it's over, and I just don't know that I see it that way.
Right. Because Walmart is at an all-time high again.
Yeah. So there you go. Okay. All right.
Survey of the week from the Wall Street Journal. 12 years ago, when researchers at the Public Religion Research Institute asked 2,501 people if American Dream still holds true, more than half of them said it did. When the Wall Street Journal asked the same question in July, that dropped to about 1/3 of recipients. And they say, still holds true, has fallen. Once held true, but not anymore, has risen. And also never held true has risen from 5% to 20% or so.
I mean, that's poppycock. Come on. Never held true?
Yes. Do you think the American Dream, if you work hard that you'll get ahead, still holds true, never held true, or once held true but doesn't anymore? And so this is from the article. It feels like my parents' generation has ruined it for us. It's such a stark case of the haves and the have-nots. I wonder how many people actually understand like what came before them and I think this is kind of thing that's really hard to articulate, because there's another one from Schwab from their wealth survey. I think we were talking about this. Americans feel they're in better shape to reach our financial goals than generations that came before them. 64% so they're more likely than previous generations than before. I don't think people are very good at the results on these surveys, understanding them.
I think I'll fall back on Josh's optimism as the default setting. It's never been easy to get ahead. I don't know if it's harder or easier than it used to be. There's always winners and losers, but come on, like this is the land of opportunity, and it doesn't mean that people don't get a raw deal and people don't get screwed, and everybody has equal access to the opportunities. But come on, where else are you going?
How about this? It's never been easier to feel sorry for yourself either and put it on a public platform. Here's the American dream. From our comments last week, going from a 1.4 GPA to becoming CFA is insanely impressive. Gives me hope. Michael Batnick, the American dream.
I'll take it. I
got a personal finance question for you. Based on your dishwasher alone, I'm going to guess that your car is generally kind of messy. Is that a fair assessment?
You think?
No, and the fact that you have 2 young kids. Because I feel like there is a huge difference between a parent's car with little kids and a non-parent car. Like if you have kids, you have no shot at keeping your car clean. Is that fair?
I'm not making a mess.
Yes, exactly. Although I could see you being in college, being like a fast food bags and bottles in the back of your car kind of guy.
One time I went to pick up Josh. He opened the door and he said, "Nope," I got in his own car.
So I was in one of my friend's cars. I have a friend with 5 children, and I got in this. He had like a Suburban. I got in this summer, and I was just like, "Oh my gosh, this makes me feel good about it." But I mean, it's just Cheerios and goldfish and stuff smashed and fingerprints everywhere, and the windows are anyway. So I cleaned my wife's car yesterday. I took the floor mats out and I power washed them. I wiped down all the windows. I did the dashboards.
You power washed the floor mats?
Oh, do you know how much junk kids? So you know those squish balls that are kind of like stress balls kids have these days, and they have like little shiny things in them. My son has broken like 6 of these. He had one in my car the other day. We were driving up north, and I told him like, "Dude, quit squeezing that so hard. You're gonna break it." And he's like, "I got it. It's fine." And next thing we know, it sounded like someone got their head blown off. It was boom. This thing exploded, and it was a glitter bomb in my car. My daughter had glitter all over her. Sides of my car, just glitter. We had glitter everywhere forever. So I had to clean my car out. And it took me probably an hour to clean both cars. I vacuumed. I used the car detailing stuff and wiped everything down. And I did the windows and I did the floor mats. And it took forever. And
you ever hear of a car wash?
Is it just easier to get a car detailer to pay a couple $100 and do it every 6 months? Do you do that?
I think
like get your car detailed?
Yeah, Robin does it for us like once. I don't know, here and very infrequently. We've done it before, twice maybe. Speaking of cars, my EV, my hybrid Wrangler, I like how it looks. I think it's a cool looking car. But what a piece of garbage! It just you turn on, it goes.
I feel like you've kind of
and then all of a sudden
like that thing from the beginning.
All of a sudden, like it goes silent. Like it was dead quiet when I got it, and also when I got it, the charge, you were able to go 30 miles on a charge. Now, for people on the South Shore who understand, I get to the Loop Parkway. It's probably, I don't know, 7 miles away. I looked yesterday, I was down to 15%. So I'm going to say the charge now takes me 10 miles.
So the battery basically doesn't work.
Would not recommend.
Okay. All right. I have a movie theater thing for you. So I still am a physical magazine guy. I get GQ and Esquire
what is
still.
that?
Yeah, Danny McBride. And I was going through it this weekend, and he talks about, they did this whole profile on Danny McBride, how he moved from LA to Charleston and moved this whole production company. There's a pretty cool story.
Didn't we see his house?
Oh, that's right. Maybe someone pointed it out. So he talked about movie theaters. He says, "I can't stand the modern movies theater that serve dinner trend. I hate it. I can't stand it. I also don't think it makes sense to combine booze with movies. You're going to have to piss. Doesn't alcohol make you want to get up and get loose? You don't want to sit there, drink beer, and just be quiet. I would have no interest in going to see a movie and just pounding IPAs."
Yeah.
I'm on board with this. I never saw the need for having like a meal of food while you're watching a movie or drinking beer.
Yeah, I think it's cool, but the novelty probably wears off. I had to use the restroom during long legs, and I hated it.
That's the thing. You don't want to leave the movie in the middle. You can't pause it.
Not great. All right. Somebody sent us last week. I was talking about being an outdoorsman, which I love camping, even though it's been over a decade.
Yeah, which is the biggest line of horseshit I've ever heard on the show. That you love the outdoors.
I do love the outdoors.
Camping, though, there's a difference between liking the outdoors and being a camper.
I love camping.
If you haven't gone camping in a decade, you don't love camping.
I do.
Like Bill Sweet goes camping like once a year, I feel like.
There's
You do
plenty
not
of
go
things that I
camping.
love that I don't have time for.
Okay.
Somebody sent us, there's a company called Under Canvas where they set up in national parks. And look at these tents. It's like glamping, I guess they call
Oh,
this.
so this is glamping, yes.
It's like
Okay, but
professional.
you can't stay in one of these and then say you love the outdoors, though. This is like a non-outdoors way of going camping.
Oh, stop it. You are literally outdoors.
Look at this. This is like a condo.
It's a professional tent.
It's like wooden floors. Yeah, that's like, I pretend to like the outdoors, but I'm really going to live in luxury. All right.
Listen, I love the outdoors, but I don't like daddy long legs. I don't like waking up with daddy long legs on top of the tents. I hate daddy long legs.
Yeah, exactly. Camping, because you always, what percentage of the time do you wake up in a tent and it's wet the next day?
100%.
70%? It's all the time.
Yeah.
Even if it's just dew.
Not a big dew guy.
That's the worst part. And setting up the tent is never easy.
The
poles and all right, parenting from the Wall Street Journal. Parenting is hazardous to your health, the Surgeon General warns. Report cites that the American Psychological Association saying nearly half of parents report overwhelming stress most days compared to 26% of other adults. They're lonelier too, according to cited data from health insurer Cigna. In a 2021 survey, 65% of parents say they were lonely compared to 55% of those without kids. I just wonder how much of today's stresses are self-imposed, because at what point in the thousands and thousands of years of history where people have had kids were they not worried about their children? Parents have always been stressed about their kids, and maybe I think a lot of what we do to ourselves today is self-imposed stresses and depression. And I'm not saying everyone, but most people. Like, I get this feeling all the time, like, oh God, did my parents have these feelings about having kids the way that I do? Like the worries and you're only as happy as your unhappiest child, all this stuff in school and sports and all this stuff that we all worry about. Parents have always had to deal with this stuff. I think now we make it harder on ourselves than it has to be.
I think the challenge is now, like, parents are more connected with one another.
Yes,
and so
there's way more of that.
Keeping up and staying involved and not getting left behind. And
that's the thing. It's competition among parents. Like they're competing with each other. It's bizarre.
Yeah. So I don't know. How do you avoid this? Like, it's pretty tough.
That's true. The lonely thing gets me because I think having, like, I don't know, my kids are my friends in a lot of ways, which is not weird, but like in the way I think part of it is the friends that you get when you're a parent are typically parents of your children, whatever. Mm-hmm. It's sports parents or it's kids in your age.
Parents of your children, parents of your children's friends.
I think the reason that people might say they're lonelier as parents is because you don't get to really pick your friends anymore, right? Your friends are chosen for you by your spouse or by your kids. Like your new friends.
And the survey puts a gun to your head and says, "You're lonely, aren't you?"
Yes. I don't get the. I would love to be. I have 3 kids. I would love to be lonely or more.
Admit you're lonely.
All right. Story time. All right. Here's a fun part about having kids. We went to a costume party this weekend. So our pool, beach, boat club that we belong to up north. This place has been around since 1903. So it's technically called a yacht club, but it's not. It's really, really old. It's been there forever, and they have a pool and a little deck where you can get drinks and like food.
You went to a yacht club and you dare to call my outdoorsman. You call it the outdoorsman elitist.
I'm putting yacht in quotes here. There's no actual yachts at this yacht club. It's just called. So it's been around since 1903, but apparently in the 1920s, this place ran into like financial ruin, and they had to have a fundraiser. And what they did for this fundraiser, for some reason, is they threw a Pirates ball.
Naturally.
And so this was the 100th anniversary of a Pirates ball. So every year they have a big party at Labor Day. It's kind of the end of the season bash. And 200 to 300 people show up. And we've never done it before because our kids were never really of age and didn't make sense. And this is the first year we've done it. And literally 250 people show up to this place dressed full gear as pirates. And so my wife went out and got all our costumes on Amazon, like Halloween pirate costumes. And we were looking a few weeks ago at like, what does the costume need to look like? And my kids want to be like Jack Sparrow-ish. And
look how cute you look in this picture. You got the dimples.
I said I need to get a fake mustache. And my youngest daughter, Kate, who's the princess of the family, said, no, Daddy, you have to grow it out yourself. You can't have a fake mustache. And no one else wanted me to do it. But hey, she says she wants me to do it. I do it. And
how long did it take you to grow that? That is impressive.
I grew a beard for like 2 weeks, and then I shaved the mustache and left the little soul patch.
Did Courtney like it?
Hated it. My wife hated it. My other two kids hated it. My daughter, who wanted me to grow it, she thought it was the greatest thing ever.
I think you look great. What's with the headband though?
It's a pirate. I don't know. It came with a costume. I had a hat too.
Did you get a lot of compliments?
I mean, everyone else there was a lot of compliments on the mustache, but not gonna lie, I kind of liked the mustache.
I love it.
Like I'm gonna be honest. I look a little bit like a porn guy, like a C-rated porn star.
Yeah. Yep. I wasn't gonna say it, but
I think the mustache plays, and I told I kept it for I took it for a test run for like 2 or 3 days, and I liked it.
Were we talking about mustaches on the show, or was I talking about that with somebody else? That all of our dads had mustaches?
Oh yeah, my dad definitely had a mustache.
Yeah.
Non-ironically. So now I couldn't tell, like, okay, I'm gonna wear it ironically, but then I can see how people go from ironic mustache to I kind of like it actually.
Yeah, I like it. We were just talking before we got started. I don't know how we got into the subject, but how weird were boxer shorts?
What do you mean?
Like, so I wear boxer briefs. I assume that most people wear boxer.
Oh, you mean the boxers that are loose? Yeah, I used to wear those.
Yeah, of course. There was a thing, for those of you who don't know, right now you wear boxer briefs, right? They're long-ish, tight underwear.
Yes.
Back in the day, we had something called boxer shorts, which were just shorts under your shorts.
Yeah, they'd bunch up all the time.
That was a weird thing, right?
I mean, are they weirder than... I think here's why we got them. Because whitey tighties were so restrictive, people said, I need to let stuff breathe down there.
Yeah.
So we went from whitey tighties, it's kind of like going from a bubble to a bust. We went from whitey tighties, totally restrictive, to boxers, like let it breathe. And then
I feel like boxer briefs didn't come into existence until years later.
Yeah, we scaled back to boxer briefs then.
Yeah.
But yeah, you're right. I remember wearing boxers.
They were weird.
Like middle school, high school, and they would just all sort of bunched up all the time.
All right, recommendations, Ben. Friend of mine, I have one friend in Hollywood, and he texted me, have you seen Strange Darling? And I said, not only have I not seen Strange Darling, I've never heard of it. So I went to the theater knowing nothing, and I have to think about this. Easily of my top 5 favorite movies of the year.
I've never even heard of it.
No, you haven't. I never heard of it. So, and nobody's seen it. It's done $2 million at the box office. All right, this is a full Batnick endorsement. Not like Trap. I understand I should have given more disclaimers, even though I thought I disclaimed the shit out of it. Strange Darling is a Michael movie, through and through. I'll just read the description. Nothing is what it seems when a twisted one-night stand spirals into a serial killer's vicious murder spree.
Okay.
The movie was phenomenal. I highly, 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 highly recommend you go see it in the theater. But even more so, I will say this, and I hope even me saying this doesn't spoil anything, but it's the type of movie that you need to go in blind, like I did. Don't Google it. Just if you're a Michael movie guy or girl, go see this movie.
Twist ending?
I'm not saying anything. Just a great film. And in the film, there was a trailer that I laughed out loud at, which I'm not a laugh out loud in a trailer guy. It's got to really be funny. Kevin Smith. Were you a Kevin Smith movie guy? Clerks,
Mallrats.
Chasing Amy, Mallrats.
Mallrats is one of my favorite 90s comedies.
Okay, me too. Mallrats was great. I think Chasing Amy, I don't think I was ready for that movie when it came out. I think it was a little bit too young. Clerks as well. But Kevin Smith has a new movie called The 4:30 Movie. When does it come out? Oh shit, it comes out soon.
Hey, my guy Justin Long.
I laughed out loud in the trailer multiple times. I might actually go see this.
Okay. I feel like it's been a while for him.
Ben, I asked you to watch a movie. Did you watch this movie?
I did. I watched it last night.
So I watched a movie called Love Lies Bleeding. I think it's an A24 movie, right? Praise A24.
It is.
Thank God for
and
that.
It definitely felt like an A24
Okay,
movie.
so Kristen Stewart, Ed Harris. It's a noir movie, and it's on Max. I said to Ben, because Ben and I have very different tastes in movies. I said, I feel like this is a Michael movie that Ben would enjoy. I was curious to hear your take. So I loved it. I thought it was very clever, enjoyable. Your thoughts?
Dave Franco was in. I'm a big Dave Franco guy. It was very well done. Like, it was a really well shot movie. I think it was a little too dark for me.
Okay.
I liked it, but it was good, but it was a little too on the dark side.
Okay.
Other than that, though, it was really well done. Yeah. Obviously, you like the dark side. I thought it was really well done, though.
All right. So you enjoyed it?
Yes. I enjoyed it, but too dark for me.
Okay. All right. Good to know.
But yeah, it did keep popping up on my HBO Max algorithm, though.
She's great. Ed Harris is great. I enjoyed the hell out of it.
Weird
All
Ed Harris hair.
right. Party in the back.
Yeah, big time.
Ed Harris was completely bald, and not only did he have a party in the back, but it started like at the back of his head.
Yeah, it was bizarre.
All right, lastly, I took my kids to a Broadway show. Oh, Ben, here's another thing here's another thing that I love to do that I never do. I love Broadway. There, I said it.
Really? I wouldn't have guessed that.
When I was young, my parents took me to see Phantom of the Opera, and I love it. I still love the soundtrack. I took my dad to see it maybe 2 years ago. Love Broadway, never go. So I took my family to see The Lion King, which I never did. It's been on Broadway forever.
My wife and I saw it a number of years ago.
Wonderful. Great experience. Kids loved it. Kobe did fall asleep at the end, but it's a long show. It's a little too long. But if I do get emails from time to time, hey, I'm bringing my family to New York. What do you recommend? Lion King.
I think so too. Yeah. My wife and I went to see it. We didn't take the kids, and she loved it. It was pretty good. I don't have a lot for recommendations this week. I do have a list for you.
Did you watch Incoming?
Oh shoot, I didn't watch it yet. No, I was gonna watch it. My wife said, no, you gotta watch it with me. So
okay.
I had to wait.
It's really funny.
Okay. I did this list off the top of my head, so I probably missed some stuff, but I took a list of like, what are some of the best high school movies ever?
Dude, if you make a list, I want in. I can't participate. This is selfish of you.
Okay, I'm sorry. I came up with this on the fly, so I might have missed some. So here's like the list of preeminent best high school movies, and I'm going to give you my number one at the end.
Okay.
Breakfast Club, 16 Candles.
Hold on, go slow.
Breakfast 16 Club, Candles, Fast Times at Ridgemont High, 10 Things I Hate About You, Ferris Bueller, Dazed and Confused, Clueless, Varsity Blues, big 90s one there.
Good
American
list.
Pie, another 91. Juno, Booksmart, Risky Business, which kind of started them in the early 80s. Can't Buy Me Love.
What's
highly
that?
Underrated. Can't Buy Me Love with Dr. McDreamy.
Who? Don't know.
Oh, okay. Great 80s movie. Mean Girls, Can't Hardly Wait, Project X, Weird Science, Easy A, 21 Jump Street, and Say Anything. Those are like the ones that I came off the top of my head. I'm sure I missed
Let's
some.
Say Anything?
That's one where John Cusack is holding a stereo above his head.
Okay,
Good party movie.
Yeah, that's a good list.
80s.
What's your number one? Oh, wait, did you say Ferris?
I did.
Okay.
So I watched it again this week. I've been on a classic movie binge for the last few weeks. It's super bad. And it's not even a close second.
Yeah, you're right.
And here's the reason why. It has all the things
Perfect.
you want from a high school movie. It's got the great party scenes. It's got the dorky kid who has a turn. It's got like the awkward sex scene. Like it checks all the boxes.
Yeah, it's perfect.
It's the cops. It's Seth Rogen and Bill Hader take it to another level. Those two as the cops as like the other. It's almost like another whole other plot within a high school movie. For some reason that was the part that I watch that movie probably once a year. We watch. And it's I think it's probably my favorite comedy of this century. Even
was
if
that 2002? What year was that?
Like 2007, probably.
7?
Yeah. And that's the best high school movie, my favorite one ever.
Yeah, that's the right answer.
Okay.
That's a good list.
Oh, Duncan said Ned actually is Ed, Edmund, Edwin, Edgar. It's a form of Ed. And it actually can be traced back to Ned Stark, was the first one ever from the 1300s. He was the first Ned.
Okay. We're going long these days. What's gotten into us?
Next week, I'm going to be coming back with some recommendations for what to watch on your flight to future-proof. Duncan threw down a gauntlet on that. You better be ready too.
Oh.
3 movies to watch on your flight on the way to future-proof.
Great call, Duncan. Yep, we'll be ready. Are we talking Delta? We're talking Delta, right?
I'm going to give random movies. You can download them ahead of time.
Oh, okay.
Not everyone flies Delta.
Okay. Well, I'm just saying the link that Duncan sent us was Delta Movies.
Yeah, it's a streaming age. Anyone can download anything.
Fair enough.
All right. Thanks, Duncan, and the production team as usual. Send us an email, animalspirits@thecompoundnews.com, and we'll see you next time.